All right, hello, welcome to Sunday School. This could be perhaps 30 minutes, even an hour, I think, of content to get through. I'm just making sure that it's sitting in the Keep the Change community Facebook group because I ran a poll yesterday asking if people wanted some more information about what to do if they have money rather than saving money, paying down debt, those types of things. So becomes quite tricky to talk about these things because there's obviously so many different things to think about. So I thought I might make a mega video and see if people get some value out of it. I'm sure there will be. There's a lot to cover, a lot to think about. This is not financial advice. This is not specific to anybody. Most of it, to be fair, is probably specific to me. So I'm going to share with you some of the things that I'm currently doing and that I suggest people think about. And you might find people will comment on this and go, "You're an idiot." I wouldn't do that, and I would do things differently. That's completely fine as well. If they want to learn from themselves or someone else, then cool. I'm on my own journey, as we all are, and I think that some of the things that I've done previously have definitely helped me. Some of them have been poor, and I hope that you guys can take some inspiration and lessons from some of the things that we will talk through. But I think it's a good place for people to be, to start with the fact that they've got money and so they're thinking about what they do. Now, one thing that does worry me about what's happening out there at the moment is that we're in one of in New Zealand, economically, we're doing okay. But what most New Zealanders wouldn't understand, because we don't really care because we're not interested in enough, is that we're actually going through one of the biggest global tightenings economically that we've ever seen. So we will start to find out that the global economy is starting to go backwards. New Zealand's kind of holding its own. We'll probably retract a little bit, but everyone seems to have a bit of money, which is cool. But it's not going to be the case down the track for other countries, and we're going to have a lot of debt as a nation as well. But so is everybody, and so that's the argument. Well, everybody's doing the same thing. Anyway, you don't need to get bogged down in that. You need to know that you've got some money, and you need to figure out what the hell you're going to do with it. So to give you some understanding, I was sitting on 6 figures, 100 grand of cash very, very recently, and I've deployed 70% of that and moved it around into different ventures and different stocks and things, which I'll tell you about as well. But me right now, my goal for the next 12 months, I'm back into gathering mode. So I'm collecting dollars and going to redeploy it into a rental property. So I'll talk you through why I'm going to do that and how I'm going to go about that, and whether that's something you should think about as well. But as I say, everybody's on their own journey, and you need to think about what it is that you're trying to achieve, because we've all got different outcomes. So for instance, I don't have a desire to have a big 3-bedroom family home that I love spending every hour in and mowing the lawns and shit. I couldn't think of anything worse, if I'm completely honest. I think it's an absolute waste of my time. I don't want to trim my own hedges and things. So instantly, I'm not relatable to a lot of people, because that is what a lot of Kiwis want to do. So if that's what you want to do, that's completely fine. And I have nothing against the people that want to do that. For me, I couldn't think of anything worse than to use my time when I know I can be productive, I can be helping people, I can be building value, I can be increasing the value of my business. Why would I stand around trimming my hedges on the weekend? It doesn't make any sense. So I'm staying away from that game. But a lot of people are saving money to go and do that. So this advice, or let's not say advice, but these opinions are probably a little bit different to some of the people that do want to go and buy a property, for instance. So these are just some of the things that I'm thinking about. And we'll run through some of the areas of where you might actually have money. So this is going to be recorded as well, obviously, so people can come back and listen to it at any stage. And we'll chuck it into it's in the Keep the Change Facebook group already, and it'll stay up on Facebook. But firstly, let's have a look at where you do have money. So the most common place to have money, of course, is in the bank. And we're actually at a record as a nation of deposits. So money sitting in deposits with banks. Now, if we give you some quick historic context, that's been the most popular thing to do, right? Because the bank's going to pay you interest. You pay a bit of tax on the interest that you get. Usually you outstrip inflation, so your money is increasing, and by the end of a 2-year period or whatever, if you're using a term deposit, you're going to have more money at the end than you did at the start, and you're going to have been paid some interest along the way, and hopefully reinvesting that interest back into the lump sum that you started with. Now, unfortunately, we're moving to a time of historic interest rate low. So this is where your parents' information and education, for instance, is not going to help you because they do not understand the situation we're in. They probably do, but the lessons that they had are not the same as the environment we're in now. We've never been here before. So a lot of the past teaching isn't going to serve you well for the current environment. So as an example, we've got a 1.5% deposit rate as a term deposit. If you're in an upper tax bracket, you're going to lose a third of that to interest. Inflation is higher than the 1% you're left with in terms of interest, which means that the cost of things out there are getting more expensive, or are more expensive than an increase of 1%. Your money's actually going backwards. So why then do we have the highest levels of money sitting in the bank? Well, two things. So safety, people are after safety because they think, well, I can't lose my money if it's in a bank, which is mostly true. And secondly, we do what we've always been taught to do. So that's the thing that you do. However, people will wake up and they will go, I'm not leaving my money in the bank. I'm not rolling this over into another term deposit. It doesn't make any sense. When that starts to happen in mass, we will see a flood of money come out of the bank and get put into other areas of the economy. So that might be buying a rental property. You're seeing people buy shares at the moment. Sharesies, it's so popular. Oh, I've got a share club. Me and my mates are talking about it. Why weren't you doing that 5 years ago? Because you didn't have to, and it wasn't easy to do, but it was still possible. So these are the things that are starting to happen, and you'll start seeing them and you'll think, oh, this is really cool, but like step back and go, what's really going on here? And can you get a jump on everybody else doing it? Because New Zealanders and people in general are massive sheep. They'll buy the same stock as someone else because they don't, want to see them win and they don't. They will go and do what somebody else does. Blah, blah, blah. They'll do all this stuff because they just follow and copy somebody else. And probably some of you listening to this are going to copy some of the things that I'm talking about doing. Cool. It's just what we're like as humans. But you need to be working to a plan that's in place for yourself and thinking about what you want to do and what you want to achieve. Because just because someone buys bloody, a new cannabis share doesn't mean that you need to buy one as well, because your goals are different. So why are you doing the same thing as somebody else? So think about that with what you are doing with your money as well. Is this where I place my money helping me get closer to the things that I'm trying to achieve? So as an example, if you're trying to achieve a passive income stream, a stream of income that is getting paid to you, then don't go and buy stocks that don't pay dividends, because you're actually then hoping for a capital gain. So you're contradicting what you're trying to achieve. So you need to actually realize and understand what you're trying to achieve firstly, and then go and find the money products that are going to help you achieve those. So if we get back to the banks, what I'm trying to highlight is that people are going to, over time, they're going to take their money out of banks and they're going to put it elsewhere because they're not happy with the return they're getting at the bank. What does that mean? Well, potentially we're going to see a huge increase in house prices. So people will say, well, no, that can't be. People can't afford property, blah, blah, blah. Hey, maybe that's right. This is just my opinion. But if you think about it at a very simple level, if you're not getting paid and rewarded enough for having your money in the bank, but someone tells you can make a 5% return on an investment property, what are you going to do? Eventually, you're going to take your money from here and put it over here because you're going to copy enough people doing the same thing and thinking, I don't want to miss out. I'm going to move my money over there. So watch that happen. I 150% agree that's going to happen. And that is the exact reason why I'm gearing myself up to buy a rental property towards the end of this year, or in probably March next year, before that influx starts to come and when things start to get a bit tougher. Also, March next year is when the home mortgage deferrals end. So then people will start to hurt a little bit more that haven't been able to figure out a way to start paying for that second property. They're going to get rid of that. There's going to be more stock on the market perhaps. But things are going to get shakier next year. So I'm in no rush, but I'm trying to position myself so that when my time is right, I can go and buy a rental property. And the reason I want to do that is because I want a passive income stream. I want a stream of income coming back to me. I had this previously in my life and I fucked it up and sold it and went and spent the money that I had from the sale. And it's probably one of my biggest money regrets, because I could have cleared that and basically had a property working for me 24/7, paying me a rental every single day, and had a passive income stream and leverage off of that to do it again. But I didn't, because I didn't stay the course and I didn't have the discipline and I got it wrong, but I learned from it. So I'm going to put that process back into place and that is what I'm working on at the moment. But basically what you need to know is that money sitting in the bank is not returning a very good investment. So if you have money in the bank, you're doing it for safety, and you're doing it for confidence, and you're probably storing up thinking, what's my next move? Now, there's nothing wrong with that, but just think about what is your next move. A lot of people with money in the bank aren't actually thinking about what their next move may be. Hey, it might be in time that interest rates come back. That's completely fine. Interest earned in a bank might be the thing that you're trying to achieve, and that might be doable again. So keep an eye out for that. But I think what we can see at the moment is that people already aren't happy with the interest rate that they're getting at the bank, so they're searching for a bigger return, and that's why you're seeing so many people flood into Sharesies at record signups during the lockdowns. People all of a sudden, everywhere I look, everybody's an expert in Tesla shares and with Hatch and all these different places that allow you to buy into the stock market. Don't get me wrong, I absolutely love it. I think it's a great thing for people to upskill themselves and learn about the market. What I do know is that worldwide, we are at record highs of stock markets ever seen. That doesn't mean that Luke then says there has to be a crash, but my gut is that we're probably going to see some sort of blow up. And I think what that will be, personally, is the demise of America. I think America is heading for basically a fall as an entire country, and they're going to lose a lot of their power as such. What that means for New Zealand, I don't know. I'm not smart enough, but I do know what happens when the American economy tanks is ours reacts quickly because we freak out. So there will be a massive hiding in the share market at some stage, I believe, and I hope I'm wrong. But when that happens, a lot of people will probably get burnt and they'll flood out, and then they may not get back in, or maybe they will, because the bank still isn't a place to put your money. But if that money comes out of the market, where does it go again? So it's getting really, really hard for people to figure these things out. But you just need to train yourself up to think and to see these things almost as they're happening and go, what's actually happening here? And not just, oh, I better call my mate and see what he's doing and do the same as him. Don't be a sheep. You want to be a leader. Think about those types of things. So cool that money's floating into the share market, but why are people doing it? And what shares are they buying? Effectively, for me, I think a lot of people are just gambling. And hey, there's people having great success and they're getting these capital gains, and then they're selling down some of the things that they're making. That's cool as well. People don't understand as well that anything you buy in New Zealand, if you buy and sell it with the intention of making a profit, you actually have to pay tax on that profit. So the IRD may come back in a couple of years and go, hey, all you guys that were speculating on these stocks, we see you were buying and selling in these short periods. We hope you put some tax money aside because we know what you're up to. But no one's talking about that either. So there's all these things that are just going straight over top of people's head because they're actually just chasing a quick dollar. So hey, there's nothing wrong with that. I do it myself. I enjoy it, and it's a bit of fun. But there's just things you need to be mindful of, and you need to be playing to a longer term strategy. So if for me at the moment, in terms of stocks, what I'm doing, I'm looking, as everybody's looking for, what's the next marijuana company? Auckland Airport went down 40%. It's got to bounce back. I'm getting Auckland Airport. Air New Zealand, surely they can't stay that low. I'm staying well and truly away from all of that shit because I'm not speculating. I don't care. I am buying stocks that I think are businesses that will be here in 10 years' time, and they will survive perhaps our biggest ever economic downturn globally, and they'll still service people in this country, and people will want things from them in time. Do I know the future? No. Could I get it wrong? 100% I could. But at least I can fall back on the fact that this is purely my fault, and I can't have I should have bought it then, should have sold it then. I knew it was going to go down if that happened. I'm buying and sitting and leaving that and letting that go. So a couple of areas where I am buying energy. So Meridian Energy, for instance, I picked up some shares in Freightways. I think that people are going to value convenience even more. And so we're going to want things to be delivered to us. We're going to not want to leave our places. We want everything right here, right now in front of us. We'll pay money to get our time back. So I can see transport and freight and things like that being even more in demand. And again, just my opinion. And I'm not putting huge sums of money in here. I'm just sticking to things that I know. So I try and invest in things that I can understand. And as an example, a lot of you would have read the story that I had about A2 milk shares that were 10 cents a share. And I sold them at 40. The next day they went to 80 cents. And for me, I could see that if they got the right messaging right and enough people to believe in their science behind that product, it was a no-brainer. And I could see that fad and that way of living becoming very, very important for Kiwis and for people around the world in a long time. So I was buying in early, and I didn't stick the course. However, I didn't have any spare money to carry on getting in, but I did try and get my Kiwisaver in, and I couldn't get my Kiwisaver into A2 Milk because it wasn't a safe share at that stage. They were 40 cents a share. Today they trade over $20. Everybody that knows me knows that story 1,000 times, but I would already probably have a good nest egg for retirement. But, stick to the things that you can see, and don't be a sheep. Follow things that you understand and go, okay, what I understand this industry, what could go wrong with it? And am I buying these shares for 5 years time, 10 years time? What am I doing? I'm not gambling. If you want to you're on the wrong website if you want to gamble. So yeah, it's fun to play with a little bit of money, but if you're going to put some serious money in there, then you need to have a high level of thinking when you're getting into this stuff. So stock market, I think, is a great place to put your money if you can play it over a long term. And I sent out the email around Unshakable and for people to read the book, because it tells you about getting in and out of the market and how damaging that can be on your returns over time. And the reason people are getting into the share market is it represents a higher return than the bank interest rates at the moment. So I can see why it's appealing, but it is also very dangerous if you don't know what you're doing as such and you are just chasing risk. But the cool thing about Sharesies, I guess, is it's teaching people to understand this and have a look at it. But realistically, in my opinion, it is glorified gambling for most people if they're not treating it the right way. So on stocks and whatnot, I recently signed up to Hatch as well, so I could grab some US stocks. People will then need to realize that if the dollar moves, the New Zealand versus US dollar, that's going to change the return that you get on those stocks as well. And I actually brought into gold and silver exchange traded funds. So it's basically tracking the cost price of gold and silver. And my returns are based on that. So there's going to be no dividends because those don't actually generate income. But for me, it's a store of value. It's a little bit of a defense mechanism. I'm watching what some of the larger investors are doing around the world, and they're moving a bit of their money and portfolios into gold and silver. Warren Buffett, for instance, for the first time in his career, he has. So I'm going, well, they know probably and spend a lot more time looking at this stuff than I do. So I'm happy to put a little bit of my portfolio into those areas. And hey, if I get it wrong, then that's all good. I brought Fisher and Paykel Health, for instance, at $7. They're now worth about 24. So they can, things like that can counter some of the things that may go wrong, but it's more about diversifying and actually balancing out some of the things that you are looking at. So, hey, all your eggs in one basket's outstanding if it works, but it's damaging if it doesn't work. But the stock market obviously becoming very, very exciting for people. We're seeing record transactions. You got to think as well about if you're on a Sharesies mailing list, as that gets bigger and they suggest you get into a company or they highlight a company, you can watch the price of that get manipulated in a very short time period because people are going to go, oh, maybe I better get that as well. So maybe you want to be smart and you want to go work at Sharesies and then find out what things they're going to put out to the market about different companies, what things they're going to profile and buy them before that happens, because money follows attention. And if you focus enough attention on something, usually the price of it will go up. So that's something that people probably aren't thinking about as well. But if you get the inside word on the things that Sharesies are going to be talking about, you can probably find yourself some gains there too. But again, that's more gambling and day trading and things like that. But for me, the stock market's a very long-term play. One of the best things I ever learnt about the stock market is someone said to me, you watch a downturn in an economy, or you watch a stock drop and you think, it drops in 25% in value. Did a quarter of the company leave? Did a quarter of the business go? No. The business is still the same the next day as it was the day before, but 25% of the value has been wiped off. So that is why people buy in when shares go backwards, if they can see the outlook of a business changing. So that is what we're obviously seeing a lot at the moment, and that's why people are making money, because as people put money back into these stocks and then trust that the business is going to survive, the value increases back up. So something to think about and something to kind of stop yourself freaking out if you do see a stock declining. Most people are getting out of fear or greed, which is driving their decision-making process. Right, I'll just carry on with my coffee here. plenty of talking. If you've got any questions or comments, bang them in here. I'd love to hear what people think. I can see there's a few people watching, which is pretty cool. Kiwisaver. Now, that's somewhere else where you're obviously going to have money sitting. Kiwisaver, for me, I'll take you on my journey. I actually, this is super informative, awesome. I manage my own Kiwisaver. Now, you're probably thinking, how the hell do you do that, and is that risky? Yes, it definitely is risky because I may get it wrong. But as I said before, I tried to get A2 milk stocks with my Kiwisaver because I knew I wasn't going to need my Kiwisaver anytime soon. I'd used my Kiwisaver money to buy a property, and so I knew I wasn't going to be able to access it. So I thought, well, I'm going to take my Kiwisaver into my hands. And I just started a business as well, and I knew I wasn't going to be contributing to it because I needed all the money that I had to invest into myself, into the business ventures I was doing. So my challenge was, okay, mate, if you're not going to be contributing to your Kiwisaver, you need to be ensuring that the value of it is increasing more than if you were contributing to it. So I set that for myself as a personal goal. And so then I was like, well, I don't want to just leave it in some fund and just check in a few years. I'm like, I'm going to take ownership of this and I'm going to figure out what I should do. So I got Craig's self-select, and this is not an endorsement of them or anything. They were just the only people doing it at the time. And it allowed me to basically self-select my own Kiwisaver portfolio. Now, I had an understanding of the stock market in different businesses and was playing a very long-term view. So I went and grabbed some of the things that I was interested in. Obviously, A2 Milk was one of them, and they didn't let me. Bugger, Fisher and Paykel was another, and I've done very well from that. So not to get into the weeds of that, what I will tell you is that in a 7-year period, I increased the value of my Kiwisaver by 100%. I doubled it myself, and I didn't put $1 in. No, that's not fair. I did put a little bit in that just overlapped the period, but basically I achieved a 100% return, and I did that on my own. So you can too, but do I recommend that? Maybe, probably not, unless you are really, really invested in the stock market and you want to understand it and you want to play the game, because you shouldn't be gambling with your retirement funds. But all I'm saying is it is possible. So just because we're told to have Kiwisaver doesn't mean that you should think, well, I'll just leave it. Surely it's safe where it is. You need to be looking at things that are in Keep the Change Night School, for instance. We're talking about what your fees are, what they're going to be long-term, what it's actually invested in, and how it compares with other funds. Those are the things you want to be looking at at a high level if you don't want to get really, really invested in it. For me, I manage my own one, and I think that'll become more and more popular as time goes on. But it's also very, very risky if you don't know what you're doing. So I've actually just realigned a lot of my portfolio and spent some time on the phone to Craig's during the week and have reshaped where some of the money was going. So basically, every time I now contribute to my Kiwisaver, they split that between the different stocks that I ask for. But I also said, hey, could I please sell some out of Fisher and Paykel Healthcare and move that into some other stocks, because in my opinion, I had too much sitting in one stock, so I had to move some of that out. So something for you to think about. But Kiwisaver, the average Kiwisaver in New Zealand is $20,000, so it probably doesn't feel like enough to be too worried about. But as that gets more and more, obviously it is, and there's going to be a massive competition for your dollar because people are going to have your funds under management. And I think Kiwisaver is our next boom industry in New Zealand as it grows over time, and we're already starting to see that. So you'll have people calling you, chasing you around, wanting to manage your Kiwisaver, wanting to show you a better way. And I think the next wave of that as well will be Sharesies and those types of things. They will say, look, I can manage your Sharesies account for you. I can show you where you can change it around a little bit. I think Sharesies are going to, should introduce something where you can follow like another investor. You might think, wow, Luke's a really good investor. What's in his Sharesies portfolio? I think all of that stuff's coming. It's still way ahead of us. But they've got to get people on the platforms, and they've got to get the money under management first. And so then once you do that, then you can start doing things and building things on top of that. So watch for those things to happen and think, holy shit, that Luke dude is actually pretty smart. I can't believe he said that years ago that was going to happen. Humble little brag there, but we will see. So that's a bit about Kiwisaver. If I've missed anything, or if people were wondering anything else, then drop a comment. I'd love to know what you might be thinking of in that space. And we'll look at another area where people may have money, and that will be equity in a property. So before we get into equity in a property, we spoke about rental properties at the start of the stream and why people might want to do that. And I'll give you some more context. So as I was going through my accounting career at the very start, rental property is one of the most desirable investment opportunities for Kiwis, because in general, housing increases every 10 years, housing value, so you know you're going to make more money. And then the structure was to have a high level of debt. You would have someone renting it off you. They would be paying the interest on that debt, so you weren't actually paying any. You might be paying some of the mortgage. You're paying your rates, all these things, and originally you could depreciate your building, and that was a fake expense that actually made you make a loss on your rental property. You could move that loss into your personal tax return and claim back some of your tax. They got rid of depreciation, so that made it harder, but a lot of people had their properties set up in a way that they were still making a loss on them, and they could claim a piece of that tax back again. Excuse me. The government changed that again and said, right, no more losses going into people's personal tax returns. We're trying to slow down the investment in rental properties in some way. But the fact is that properties are still increasing, or have been historically, every 10 years, going double. So why wouldn't you want to get into it? So now what does rental property investment looks like? Well, hopefully it still looks like those gains, because we're always adding people into New Zealand. People are going to need somewhere to live, and we're not building fast enough to keep up with it. As much as the media likes to talk about construction and things like that, we simply don't have enough houses, allegedly, for people to live in. I believe we do, but because we've invested so heavily in rental properties, we have them being used for Airbnbs and things like that. There's so many dormant, empty places that people could actually be living in, but we're trying to make money from them. So do we have a housing crisis? Well, I don't actually know. Probably not, if we were smart about how we lived. But unfortunately, we're in the situation we're in, and it is what it is. So, hey, you've got to make the most of that situation. So rental property, a great investment if you want a capital gain, which if you don't sell within the 5 years, then you should not get taxed on that gain. But again, you want to check that before you go and just buy one, to make sure that your situation is set up perfectly with an accountant, perhaps. So then you're going to rent it out, and obviously as interest rates are so low at the moment, you're not actually paying that much money against the interest of that debt. So every time the interest rates drop, your return, or your potential return from buying a rental property, carries on going up. So for me, the reason I like it, or like the idea of it, is because you've got something, a project, like giving you money. It's paying you. It's like another job, but you're not having to do the work. Someone's going and living in your property, and then they are paying you to do that. So there's so many people preaching property out there, and I don't want to get right into the weeds of how to do that and claim to be that person, because it's just, for me, it's just boring. It does my head in. It's just, it doesn't add any value to the economy of New Zealand. So that's what pisses me off about property, if I'm going to be bluntly honest. But it's still a very, very good investment tool. So a way that you can buy a rental property if you're already in your own home is you can use the equity in your current personal home that you live in to buy a rental property. So we did a money mail on that very, very recently, which I hope you read. And if you didn't, go back and read it and understand it, because this is also what Kiwis have done time after time after time to get themselves ahead, to get on the property ladder, to keep growing. They are using the equity and the growth in the value of their current property to buy another property, and then they rent that out, and those people pay the bills for that property. They pay the mortgage, the rates, the insurance, the repairs, the property management, all of that. You might top it up a little bit, but you can potentially buy a rental property without even having to put $1 down, as explained in the recent money mail. So go and look into that. It is being used commonly across New Zealand everywhere you look. And we spoke with Mikey, the mortgage advisor that I trust and I get my information from, and he's gone and brought another one himself, and he's done the exact same thing. So he spoke in the recent video we did about the 3 properties he's got and how he's got those via bugger all input from his own actual cash. So if you can get it working, it's a very good way to build up some equity and build up some funds. So if you've got equity in your home, you want to figure out how you can use that and use it to your advantage, because that is what most people will do or have done previously, is they've gone and brought their own home, and they have then built up equity in it and then paid down the debt and things like that. Then they get a bit stuck. Well, what do I do from here? I don't have enough deposit for another property. Well, you need to speak to a mortgage advisor, because there are ways around that. But I think younger people in our generation, and the reason part of why I'm doing this stream is because a younger guy said, oh, a lot of this guy's content seems to be about debt and paying down debt. But I know a lot of these people in their 20s, they're actually got a bit of money sitting to the side, and they're going, what do I do with this? And if you don't know what you're doing with your money, the thing that you usually do with it is get rid of it. So people will piss it up against a wall if if I would use an example from my own earlier lifestyle, but people will find a way to get rid of it. So they're probably thinking, well, I've got this money, what do I do with it? And a rental property, for instance, is something that people could be looking at doing. But whilst on that, I think, if you want to think about things from a different, like more practical level, you think about what skills do I have? So for me, for instance, I know that I can help people with education. Well, I then should task myself of figuring out how I can monetize that as such, and make a dollar from doing that. Or I can build audiences, I can help people with accounting, all these different things. I can monetize those skills. So that's my job. Someone perhaps that is an electrician can go and look at a house and they go, oh, this has all been wired wrong, this isn't working properly. I can add $40,000 of value to this just by fixing it myself with my own hands. Same thing for a builder, those types of things. They can, you lock your profit in on a property when you buy it, not when you sell it. Everyone thinks it's the reverse way. It is when you buy a property, because you can see the value that you can turn that property into. So you go in there and you fix it, you do it up, whatever you need to do, if that's a skill set you've got, and you add value, and then you sell it, and that's how you make your money. So that is what tradies, for instance, are thinking about, and they are building themselves wealth by doing things like that. So they are applying their skill set to something that's going to help them make more money. And that is not something that we're really kind of taught to think about or to do, is to use the things around us to help us generate more income. A very simple example, when I was flatting, we had a feijoa tree. We couldn't eat all of the feijoas. I went to New World, I stole some of their bags, and I went and bagged up the feijoas. I chucked them out the front and sold them, and paid off a week's rent with the money that I collected from selling the feijoas. So get resourceful, look for things around you, think about your own skills. Don't just get stuck in your lane of like, nah, I got a job, I go and get paid to do that, because it is not necessarily how you're going to generate more income or wealth over time. So that's a bit about equity in properties, where money might be sitting as well. And just lastly on that, if you have a loan on a property, but then you have cash sitting somewhere else, then you can use that cash to offset some of the debt and the interest that you're paying on that loan. So it's not as sexy or fashionable or rewarding as it used to be, as interest rates have become less, but it's still doable, and it's something you should think about. So how do you benefit from sums of money that you have lying around? Can you use those to offset debt and things like that? Right. Don't know if you guys can hear that, but someone's blasting some serious sounds out there. Another area where you may have money, or you may be thinking about money, is inheritance. And you might be thinking, well, I'm going to inherit some money. And it's not something we like to talk about because it's touchy, and it's also, what's the word? We're assuming that things are going to play out the way that we want them to. Now, everywhere I go and read, the more I look into information about money, when you receive a large sum of money, the average time that it lasts is 3 years. So that means that if you inherit money and you don't have a plan, it's probably going to be gone in 3 years' time. If you win lotto and don't have a plan, the money's probably going to be gone in 3 years' time, which is bloody scary if you think about it. But now that you know that, you can arm yourself and you go, well, how does that happen? And how can I stop that from happening? So, hey, if you do know you're going to inherit money, then you shouldn't be banking on that, in my opinion. You shouldn't be banking on that, but you should be planning for what you may do with that money if it does come, or what you would do if you had a large sum of money. So I said to a client the other day who loves helping people in the community and has a bit of a charity, and I said, what would happen if you got given $1 million tomorrow? And she got so excited and went off on this huge rant about what she'd do with $1 million. And I said, great, sounds like you'd have none of it left at the end of the year. And she said, yeah, well, we don't really need it. And I said, that is not the right answer. I said, because what happens if one day someone comes and gives you $1 million? What are you going to do? And she's like, well, I'll probably do exactly what I just said. And I said, yeah. And then in a year's time, you're not going to have the $1 million. So I said, you need to prepare yourself now that if someone does come and give this business and this charity $1 million, you're going to know exactly what to do with it. And what you do with it is not what you just said. You think you would do with it. You want to find ways to turn that into more money or generate other income streams that are going to allow you to do some of the things that you said and do them for a longer time period. So it just really got to thinking differently. And it's something that obviously we don't teach people, given that if people get a large sum of money, it's gone within 3 years. So start putting some thinking and a plan in place for what would I do with a large sum of money? How would I protect it? How would I multiply it? How would I make sure that it's not gone? It shouldn't go backwards, it should go forwards, those sorts of things. So again, something that people don't talk about often, but obviously something that we probably need to be talking about. And why that's important for all of us is that if we get to the stage where when we retire, and I'm 30, well, I don't know if I'll retire because I probably like working, but 65 is the year when you get your Kiwisaver money out. If I'm 33 years away, I do not believe that in 33 years' time, I'm going to get given my Kiwisaver as a lump sum. There is no way that they're going to trust us to have lump sums of cash and look after it when in 3 years' time, the average person will be broke. It doesn't make any sense. They're encouraging people to save for 40 years and you think they're going to just give you the large sum of money and go, yeah, do what you want with it. It's not a problem now because Kiwisaver balances aren't high enough. By the time we get there, they will be high enough. Again, another prediction from me. Hopefully I'm wrong. Hopefully I'm way off. People will tell me they can't do that. Well, maybe they can't, but who knows? Legislation might change. Things will change by then. And I don't know if I would want a large sum of money at 65 and trust myself with it either. So again, this is something that people should be thinking about because potentially one day you will have to think about it. So Kiwisaver is making that a reality for most people, that they're going to have a large windfall at some stage in their life where they get given a large sum of money that they've never had in their control before. So think about that. Right. That just about sums up a lot of the things that I'm currently thinking about. Some of the things that I would suggest if you do have money. Hopefully that's been helpful. I can see a few people still watching. It's been a long 40 minutes. Would love any comments and stuff before I close this out and just see if there's anything that I might not have spoken about. I'd encourage you to go back and listen to it a couple of times. It might trigger you to think, cool, that's really suggested something for me that I should go away and get some more information about. And yeah, that might just be the starting point for you to go and investigate your Kiwisaver, your rental property ventures, your stock market habits, all those sorts of things, because realistically we don't all have the answers and we don't know what is coming out there as well, because we're in a very, very testing and different time. So you know, you want to arm yourself and give yourself some strength around these things, because when they go pear-shaped, we see people, they're not emotionally strong enough to figure out how they should act. And I'm still guilty of that. I'm not trying to claim that I'm some sort of professional that's figured all this stuff out. I knew that the stock market got hammered in March, and I was like, right, I've got all my money ready. I've been waiting for this. And I was just too scared. I was like, fuck, do I want to dump it in here? What's really going on out there? I knew this was going to be major. And I missed all those upswings, but that's okay. I'm still always investing for the future, and it fits in with my long-term plan. So it's a very, very hard thing to try and master some of these, but we have to figure out our emotions. And a couple of things to finish, I would say that I'm writing an article at the moment for some business owners in the business space, that as a nation and as a globe, we're focused on debt as a solution to all of our problems. So what that means is if you can't afford a property, you go and get a loan. We couldn't afford to pay wages to staff, so we were using the wage subsidy at the moment. That's not money. That's debt from the government. That's the government's debt. They've given it to us and we've passed it on as employers. We can't afford things now. We use Afterpay. So debt is our chosen tool to solve all of our problems. Now, you can only do that for so long until you go, this solution doesn't work anymore. And we don't know how long debt as a solution is going to work. But what I encourage business owners that we work with to do, and what I encourage myself to do, is look inward to productivity. So another way to solve a lot of problems is productivity and efficiency, but it's not what we get taught to do. So an example of that before, I see my feijoa tree, and I go, right, I can make that more productive and more efficient for me. There's excess leftover kiwi fruit, feijoas. I'll go and sell them at the gate. And so then I go and exchange productivity for money. At the moment, what's happening is people are being giving money and they're not having to produce. That goes against everything you got taught and I got taught as we were growing up. If you want something, work for it. Well, that's not true, because that's not what's happening right now. The barber is sitting at home and she's getting money, and she can't go into her salon to do the work, but she's still getting paid something. So something is broken, and we won't see that play out for a long time. But the best way to operate, in my opinion, is to look at yourself and your situation and go, how can I be more productive? How can I make this more efficient? How can I make my Kiwisaver more efficient? How can I pay less fees? How can I generate another $1,000 of income? And this is where probably for people you think like, oh, this guy's just going on and on now. But this is the stuff that no one's talking about. And this is the stuff that the really smart and the wealthy people are doing that gets overlooked because, oh, the ritual, they've got it all, blah, blah, blah. Because they've figured out some of these things, and so then they go and apply them into the market, and this person doesn't have the education, they're never going to be able to do that. No, we're like blind to it because we haven't encouraged people to think about it more. So I'm constantly trying to find ways to be more productive, more efficient, and build those into all the things that I'm doing, whether it be work, my life, my fitness, my health, my finances, my Kiwisaver, the stocks, education, always looking for ways to be more productive and more efficient. And I think if you can get into that habit and start doing that, it will help you so much more than another credit card, a car loan, Afterpay, a government handout, all this stuff. It's just that's the debt way. The other way is the productivity way. So hopefully that resonates for some people. We're probably thinking, holy shit, what's he even talking about? But that's something we work with business owners a lot to help them improve their businesses, and it does work, and there's no reason it can't work for individuals as well. Question from Tess: would you recommend to stay on with Hatch or look into US Sharesies? A great question. I now have both. The only reason I got Hatch was because I wanted to buy something in the US market and I wanted to buy it quickly, and I couldn't do that through Sharesies, and I couldn't be bothered doing it through my broker. I had to fill out all these other forms, and Hatch made it easy. So I used Hatch, but I haven't compared the massive differences between the two. But again, competition is probably going to make it better for the consumer. So yeah, I don't want to speak out of turn about either of their offerings, but I'd imagine the fact that there's now two in the market and people are excited about buying Tesla and all these things, they're going to be competing for people's dollars. And I noticed that Sharesies straight away were advertising on stuff and spending money on marketing, saying, hey, you can buy with US shares, and they're going to have a faster rate to get to the market because they've got a bigger customer base, and it's very, very simple to activate US stocks inside Sharesies. So I think they will win that race because I just don't know what Hatch would have up its sleeve to not do that. If I compare the pricings, that's, I guess, where they will start the change to try and compete for the same customer as such. But yeah, very interesting that people are now looking at buying stocks in the US. And I think just on that, if you're holding stocks over 50,000 externally outside of New Zealand, $50,000, you need to be thinking about that because there are tax implications as well. So again, these are some of the things that people are not being told about that the IRD may come back and look at down the track because they're going to very easily be able to get people's trading history, whether that be US, New Zealand, and how quickly, were you buying and selling your shares, and all these people that are claiming to be bloody geniuses in these Facebook groups and whatnot might get a wake-up call in a couple of years when the IRD say, hey, we've gone through and seen that you're buying 10 stocks a day and selling them all within the same month. What was your intention? Obviously not capital gains, more in line with making a profit. Therefore, would like you to go back and put that into your tax return and pay some tax on it. Again, I could be wrong, but those are the rules, and the IRD don't. They have 7 years to go back and look at the things that we've been doing as people. So just be aware of that if you are playing around, and you should know in your gut, like, oh, this seems a little bit too easy. If anything's too easy, usually the IRD want to tax it in some way because we need some money back to go through the rest of the economy. So again, hopefully that's been helpful. There's been a fair bit there. I've not finished my coffee. I'm all out of energy there. I think 45 minutes. Yeah, look after yourselves and find ways to protect and look after the money you have. It's so hard to make more money. It's even harder to figure out what to do when you have it, to then multiply it, to then turn it into more money, and to do that consistently. So my closing note would be, as more and more people get excited about 100% gains on Tesla and 60% increases in cannabis stocks and all of these things, remember that some of the best investors in the world are achieving 5, 12, 20%, and they are wrapped with it. That is a huge gain. So I think a 10% return over 10 years, no, over 7 years will double your income. So yeah, it's a 10% still a massive amount to get. And of course, I think the greatest returns you can get are on yourself and finding ways that you personally can become worth more, and you can increase the returns. And as a mentor once said to me, he said, "Why do you keep coming to these meetings asking me about stocks when you should be investing this money in yourself?" And I'm like, whack, what a wake-up call. Do you want 5% increase in your Auckland Airport shares, or do you want to put that same $1,000 into your own ventures and into yourself and turn that into $2,000? And I think there was a wake-up call I needed to think about things a little bit differently. Alistair, my man, says, great point. Sharesies don't really declare what personal tax you might have to pay. Yeah, something we're all kind of hiding from at the moment, I think. So it's going to be interesting to see how that plays out over time. Righto, guys, I'll leave that there. There's no doubt 100 things. Whenever I do these things, I always, I just basically do them off the cuff. So I've only got 8 lines of notes in front of me and I've talked for 46 minutes. So by the time I get off this, I'll probably think, shit, there are 100 other things I should have said, and I'll do another one of these at some stage as well. But if you're watching live or if you're watching recorded, then I'd love to know what you got out of it, if it was helpful, if you agree, if you disagree, what you'd like more information on, and those sorts of things. So again, work back to your future and what you want it to look like, and then use your money to help you get there, not just do the willy-nilly thing that everybody's doing and be a sheep. All right, team, enjoy the rest of your Sunday. Sorry to chew up an hour or 47 minutes of it on a Sunday. Hopefully helpful, and we'll talk to you soon. Cheers. Oh, we might have frozen it.